Yo, what's going on, guys? Welcome back to another video on the channel. Today, I want to go ahead and share with you guys how I prepare my trading days every single morning in the current market conditions that we are seeing. It is no surprise that the market has been very weak, and it is no surprise that this is very different of a trading market than it was in 2020 and 2021, which is where most people probably got involved into the market. This year is very different, and switching your mindset is something that is 100% necessary to find success in the current market. There's a lot of changes that I've had to do this year to prepare myself coming into every single day. I have to look at different things. I need to be looking at different levels than I was previously, and that is what I want to share with you guys today. I want to share with you guys what I look for on a daily basis, the rejections that I look to play, and my mindset coming into every single day. So let's go ahead and review that today. Let's get an idea of what I look for on a daily basis. Press that like button if you guys enjoy this video, subscribe to the channel, and make sure to press the bell notification down below so that you guys are alerted every single time that I go live every single morning starting at 8 a.m. So guys, before we jump into the charts and review some of the things that I'm watching on a daily basis, there's a few mindset things that I want to go ahead and go over first before we jump into that. The first thing that I want to really make clear, and I know this could change, but this is what I've been seeing over the last, say, 2 to 3 months, is we can no longer try to trade breakouts. It's the unfortunate truth. And, 2020 and 2021, breakout trades were something that was very lucrative. A lot of people were making tons of money, trading high day breaks, trading intraday breakouts, and it was something that was very popular. The reason for this, the market was very strong. The overall NASDAQ, the S&P 500, was moving up almost on a daily basis, and trading breakouts on, let's say, Tesla or Nvidia or Apple was something that was quite easy and something that a lot of people could do. A lot of people found success during that time trading those breakouts. However, guys, this is something that you can simply not look for anymore. You can't look for high day breaks. You can't look for pre-market breakouts with a market that is terribly weak over the last few months. We see stair-stepping moves to the downside on the NASDAQ for the last 2 to 3 months, and trading those breakouts is just a great way to get yourself caught in one of the classic bull traps that we see almost on a daily basis. I know this is pessimistic. I know this is something that a lot of people don't like to hear because a lot of people are used to trading calls, trading breakouts. They think that's the way to make money in the market. But unfortunately, guys, the honest truth is that breakout trades to the upside are very rare to find, and it is something that is most likely, the probability is on the side of you losing money on that type of trade and getting stuffed at a previous rejection point when trying to trade those breakouts. This is something that I try to get across as much as I can in my trading community. There's still a lot of people that are looking for those breakouts, trying to catch those big upside moves, and almost every time they fail, they reject at supply. And I hate to see it because I know that at one time this was working. I know that at one time this strategy was something that a lot of us used to trade, and things have 100% changed, and we have to adjust to that current market condition. So that's the first point that I want to make. Trading breakouts to the upside in particular is something that I would be very, very cautious of and be very particular. If you see that type of move, you need to see overall market strength on the NASDAQ and the S&P 500 to trade those high day breaks, which are really just not showing up as much as they used to. So along the topic of trading high day breakouts in 2020 and 2021, this year, more than anything, the thing that I have adjusted the most in my trading is trading rejections to the downside, trading puts at supply levels that are aligning on the NASDAQ as well as on individual stocks. This is not something that most of us probably did in 2020 and 2021. It was not something that was very common. Trading those rejections, trading supply usually ended up with you losing as the market was strong and it was pushing out and we were getting high day breaks. And most of the time during that period of trading, you wanted to trade the breakout. You wanted to trade the upside. But we have seen very clearly this year in 2022 that the rejection play is something that is so much more likely and so much more lucrative. And I'm going to go ahead and share with you guys plenty of examples of these types of trades in this video today, trading those rejections from the NASDAQ on individual stocks, trading the pre-market high rejections, trading previous supply rejections. Focusing on playing the rejections in this market has definitely been something that I have changed substantially coming into this year, and something that you probably should look into with a market that is continuously trending to the downside. The last 2 points that I want to make before we jump into the charts is 1, avoiding chop, and 2, not trying to catch bottoms. Avoiding chop. We have seen quite a bit in this market that we have seen choppy days. We have seen days where the NASDAQ trades within a range almost all day, and avoiding that chop is an absolute must. Trading in chop, with my experience, is an absolute killer. Trading in chop, trying to catch small moves to the upside or the downside within a range is extremely difficult, and something that I try to get across as much as possible to avoid. And finally, guys, the last and I think most important thing right now in 2022 to adjust your trading is to not try to catch bottoms. There is simply no upside for you to try to catch a bottom in this market. The market has continued to slip to the downside, and trying to find bottoms just simply is not something that I think is part of a trading strategy in 2022. Sure, you could be the hero that catches the bottom and makes quite a bit of money if we bounce, but I can guarantee you that if you wait for confirmation, the trade is still there, 100% still there, waiting for real confirmation. Sure, you might miss out on 10, 15 points on the QQQ or on the overall market, but the confirmation is what you're looking for. Waiting for that real confirmation of upside is what we need to wait for. Trying to catch the bottom, being a hero in the overall market right now is something that I would really honestly recommend to avoid, and wait for real confirmation if you are looking for that upside. So with that said, guys, those are 4 things that I have really changed in my trading in 2022. No more high day breakouts, looking for the rejections, avoiding chop at all costs, and not ever looking to try to catch a bottom. I don't even look to try to find that in my trading at all during this market in 2022, because statistically over the last 4 to 5 months, there has been no bottom. So why am I trying to catch a bottom when there is no bottom in sight? I'm waiting for confirmation. That is when I will try to catch that bottom, when there is more confirmation to the upside. So with that said, guys, I want to jump into the charts. I want to go ahead and sort of dive into the whole concept of high day breaks versus rejections, and then break down what I look for every single morning coming into the trading day to try to find where the market could potentially reject. All right, guys, so on the charts, I want to go ahead and sort of break down the whole idea of not looking for those breakouts and trading the rejections. I want to go ahead and use actual technicals here and explain to you what I mean by that, by me saying that, and give you a real example over, this is almost the last 5 to 6 weeks. Over the last 5 to 6 weeks, we have not seen a single breakout of a key level. There has not been a single high a day or structural level breakout on the NASDAQ. This is the easiest way for me to show it to you on the NASDAQ, but if you sort of use this same analysis on your own time on individual stocks, I can almost guarantee that you are going to see the same kind of analysis. So looking at this chart, guys, we are on the hourly chart just to make some sense of what we're looking at. We are on the hourly chart on the NASDAQ, and we are looking at the weeks, each in between each of these red lines is a week of price action. So here's week 1, week 2, week 3, week 4, week 5, week 6, and we are on week 7 right now. I'm going to go ahead and remove the moving averages because they really don't do much for us here, just to clean up this chart. So we have about 7 weeks of price action here on an hourly chart for us to analyze and understand what the current market is doing and to adjust to what the current market is doing. So if we start with week 1, guys, we had a key level of structure build around 14,300. This started to build right around Tuesday of that week. That is right here. You guys can see over that entire week, we did not have one breakout above that key level for an entire week, and playing the rejection every single time that week was the correct trade. If we move over to the next week, week 2, we can see that again, the same exact rejection point, 14,300, never broke and never had any upside. Again, the right trade was playing the rejection and looking for us to move into that level, trusting the supply zone, trusting the rejection, changing that mindset from, oh, let's look for the breakout here, to, okay, this is a supply zone that has been rejected multiple times. I'm looking to play the downside. There's a lot of people still that get trapped in that upside. You want to be the person that takes it from them and trades it to the downside. Now, we move into the next week. This is week 3. You guys can see we made a stair step to the downside. Here is our first stair step in our analysis here. First stair step right here, new level is built at 13,500. What happened week 1? 13,500, 13,500. 2 textbook rejections at the new stair step supply. What happened in week 4? Week 4, we got a big push. I believe this is the FOMC meeting, and we pushed right into supply. Again, people chasing the upside off of FOMC, looking for the breakout, looking for the Jerome Powell pump that is really not here in this market. What happened to them? They got messed up. They went ahead and looked for the upside in a market that is traditionally weak, and they got a huge rejection. Moving into week 5, where we once again make a stair step to the downside, building new supply zones. You guys can see the next supply zone that built was 12,600. Once again, all of this week, rejection, 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 all week. The next week comes in. Where did we reject this week? Week 7, we rejected once again at this level. So, over the last 7 weeks, stair stepping to the downside, playing rejections at supply, not getting caught in trying to catch higher day breaks, breakouts on the overall market. This is the NASDAQ. You could trade the QQQ using this analysis, or you can go ahead and match this up to an individual stock that you watch, and you will see a very similar thing. Now, if we move into the week that we are currently in, this is week 8 of this analysis. You guys can see we have built a new stair step level, and that is at 12,070. Right here, guys, over the last few weeks, or over the previous week into this week, where has the market started to reject? 12,070. 12,070 right here. You guys can see 3 rejections, and we did not even try to test that today. So, going into the rest of this week, what is my plan? How do I prepare myself as I come into this trading week? What am I looking for if I see upside? Am I going to try to trade this breakout? Am I going to be the one that tries to trade the breakout? I'll go ahead and zoom in so we can see this a little bit closer. Am I going to be the person trying to trade the breakout of this supply zone that has rejected 3 times already over the last, say, 5 days? No, I am adjusting how I trade. I am looking for this rejection. I'm looking for the rejection that has happened over the last 8 weeks. Analysis, statistics is on my side if I am trading that type of play. If it doesn't work, then it doesn't work, right? I take my stop. But if I want to trade what has been working over the last 8 weeks in this market, I am trading this rejection. I am not trading the breakout anymore. Traditionally, you would know, you guys are probably familiar, trading the breakouts, as I said earlier, is something that was very popular, that worked quite a bit in previous years. But this year, it is just simply not working. You can see, in my opinion, that if the market does push back into 12,070, I will be looking for that rejection, and I will be looking for a new supply level to be built to the downside. So guys, just looking at analysis over the last 8 weeks, it is very clear to see, right? I am not making things up. This is what is on the charts, and we cannot deviate from what is on the charts. We cannot tell ourselves in our head, I'm looking for a bottom. I think we're going to break out. I think the market's going to squeeze to the upside. The market doesn't care what you think, right? The market is going down. The market is rejecting. It is rejecting supply, and we need to trade that supply. And this is something that I try to get across as politely, but also as affirmatively as possible, because I do not like to see when I see traders trying to trade breakouts in a market that is simply not going to break out. Things can change, right? We have to adapt to the market. Maybe the FOMC minutes tomorrow changes everything I'm talking about. Maybe the bullishness comes in. If it does, we go ahead and look at these same levels, and we look to play the rejections once again. So for example, let's say tomorrow, FOMC, we break this level. Where am I looking for my next rejection play? Right here. If it breaks that level, where am I looking for my next rejection play? Right here. If it breaks that level, where am I looking for my next rejection play? I am looking for my next rejection play at this next level, right? So I am still keeping these levels on my chart, watching these levels to see if the market still rejects. That is something that is common in this market, and something that has been very lucrative for me, and I'm sure many of you, looking for those rejections. Now, along the topic of catching bottoms and trying to find confirmation, we can use this same chart to try to help us in that analysis. And what I will say is that instead of trying to catch a bottom, let's say here today, buying calls saying, I think the market's going to go up, why not wait for a break and retest, right? Why not wait for this? Or let's say you want a little bit more. Why not wait for a break here and a retest here and more confirmation, right? Or if you want even more confirmation, why not wait for a move up to here, wait for that bullishness to set in, wait for that retest, right? Looking for these retests, looking for real confirmation that these previous supply zones are becoming support. That is what I'm waiting for to try to get bullish in this market. Of course, I like to be bullish, right? No one likes to be bearish all the time. But in a market like this, we need to make sure we sort of change our mindset to see what the market's doing and to follow the trend. If I'm looking for upside, I am waiting for these levels that I have marked out here on your chart. I'll delete these red lines for us to make it a little bit more clear. I am waiting for these levels on my chart. All of these stair-stepping levels that have rejected over the past 8 weeks, I am waiting for them to turn into support. Can we start to see some type of upside move, reject or break through supply, and start to play the retests to the upside? This is very easy to catch. This is not something that you need to be first to, right? You could get a call here, you could be right. But the person that trades it here, or let's say even here and waits for confirmation can potentially make just as much money and get a higher probability trade. So playing the rejections, changing that mindset to stop looking for breakouts. This is clear analysis over the last 8 weeks that shares with you what exactly the market's doing and sort of proves my point as to why trading those breakouts just isn't working, and catching the bottom is better if you just wait for some confirmation to the upside, waiting for supply to turn into demand, waiting for previous resistance to turn into support. I hope this video gives you some insight into my mindset right now in the market. I hope it gives you an idea of what this market is currently doing if you have sort of disconnected from what's going on. Downside is there. The trend to the downside is there over the last 8 weeks, guys. That is 2 months of straight downside, making stair-stepping moves to the downside. There has not been a single breakout of a key level on the NASDAQ for 2 months. Let that sink in. If you're trying to trade breakouts in a market that has not broken a key level in 2 months, you need to change what you're looking at. So hopefully this helps. If it does, press that like button. I apologize for the slightly pessimistic thought process, but it is something that has to be talked about, and it is something that I think will help you guys become better traders in this bearish market. Press that like button, subscribe to the channel, and I hope to see you guys in the next one. Peace.